Hello everyone. I hope the sound is good so we are able to make a start on our webinar this morning. I'm not sure if any of you can just confirm to me, perhaps by going on to the trading view, and let me share the screen and then I can direct you if you're not familiar. Okay, if you can confirm, somebody can confirm for me if the sound is good and you're able to see my screen. Uh, Basically, you go down to trading view and then this chart room here. It's the Danby charting, and just indicate to me there that you can hear the sound and the screen sharing. Is that sound is echoing or booming? Is that right? I'll move the mic away a little bit. How is that? Is that better? Okay, good. So you're able to see the screen. So let's make a start. Just a brief disclaimer before we get on with our content this morning, and that is the material presented in this webinar is only for educational purposes, and it should not be taken as an advice or recommendation or inducement to do anything, and that I am not regulated by any governmental agencies in any jurisdiction. Trading financial key, so you should take care and seek necessary advice if you feel is important, and how you employ or use the material that we present today will be entirely at your own discretion. So let's make a start. Those of you who are not familiar with me, you can follow me here, Dan V, on Trading View under my name Dan V, and you are able to explore various charts that are posted there on different instruments, and in which I published one of this one here about a month ago, and then is only posted ago. So these are the chart. This is the chart that I used to publish that first one about a month ago, in which I outline 4 possible scenarios playing out. Not necessarily all of them carry the same degree of probability, but nevertheless, one could argue that there are 4 possible scenarios that would play out, and hence that's the reason why I outline 4 in that particular chart. And then a few days ago, I published this chart, in which I am suggesting at least that we have potential weakness, even if we should move higher a little bit, we are potentially in an area where upside is limited, and we would look for the price to come down back towards 360, where my green line is, or maybe back toward the lower end of the rising trend channel. So whichever way, we are in the shorter term looking for weakness in the Bitcoin. Intermediate term to longer term, the other 2 scenarios that we looked at in this one could play out, but I'll go into a little bit more detail because it's harder to explain this in text form, which I have done when I publish the chart. So we will go through and see which of these scenarios is more likely. Well, first of all, just a comment on why I use Bitstamp or Bitcoin Bitstamp or a Finex chart. Many have suggested that I should follow the charts, which is the Bit China or Yuan or OK coin exchange. I understand that there may be some reasons for this, but in terms of overall analysis, I really see no major difference between them. On this one, for example, you can see that it's the Bitstamp on the lower one, and the upper one is Bitcoin China. And when you look at, visually, every single high and low, the timing of these are very similar. There are some minor differences, but not significant. The only major thing that we could have benefited if we use these two charts together, not by themselves, is you see when we had this major top in November 2013, where China went on to make a new high, and the Bitstamp didn't. It made in fact, it made a lower high. So that was like a fairly big indication that the momentum to the upside is likely to end, and that we could well be in topping area because of the price divergence between the two. However, when I'm looking at this, if we were to use Bitcoin China, maybe there is more volume there. So I understand many of you feel we should use that. But what we have to factor in also is that there is a currency difference between the Bitstamp, which is in US dollar, and the China one is in yuan. So because of the currency differences, there may be some odd variations on the chart, but not significant. I mean, I have gone through everything since then, looking at major points, and I personally see, you can see here, there's no real difference. There may be a day or so if you drop down to a smaller time frame, maybe 4 hour, then you might be able to see price divergence like this. And then, of course, it could be useful. But on a bigger picture analysis, I really see no difference between the two charts. So that would have been first divergence. Over here, you see, for example, China had a big spike in comparison to what Bitstamp had. So that was a minor difference. But other than that, I really see no real change. So what I'm going to do is I'm going to continue with the use of the Bitstamp. So I will all analysis will be on a Bitstamp. From my perspective, the only one reason is that the longest price history we have uninterrupted is on a Bitstamp, and we've been following that for quite some time. So before we go into that, there is one particular chart. This one looks very busy, but I will explain to you the logic behind it, and then you can do this sort of thing yourself. We are interested in what happened, not so much historically, but what happened from the November 2013 to the current. Okay, and what I notice is, for example, using the time analysis or time symmetry, and this is in contrast to some other analysts on TradingView who have been using some form of time analysis, time symmetry. And for example, they might have said, go back and see, looking at the corrections we had back in the historical past, or how many days it went up before it had a correction, things like that. And I think whilst that is useful, but it is probably less relevant, because from my understanding, the entire move that we had from wherever it began up till that November 2013 was just one impulsive cycle. And we'll go into why I think that cycle might actually have ended, although for quite some time during the 2014 and part of 2015, some of my charts suggest that the major top we had in November 2013 was possibly a large wave 3, and therefore we were looking for completion of a large wave 4 before we can resume the large wave 5. And that is still possible, but I think less likely now. The longer the time goes on without us making a strong bullish move, it is less likely. So I am also now gravitating toward an idea that I posted early in 2015, I think it was January 2015, where this might actually be a very significant wave 5 top, and therefore one complete cycle of 5 waves. And that's one of the reasons why we have had such a long sideways correction. So I will only focus in the section here since 2013 November, and you see the first drop is 67 bars. And if you double that 67 bars, then you have again from a high to a low. Now when you do time symmetry analysis, one of the problem with this is, do you measure from high to high or high to low, and where do you apply it from? So in this particular case, you can see now from my chart is that it doesn't follow, there's no rule to say that if you do a measurement from high to a low, then it must also synchronize with a high to a low. However, sometimes they will, and sometimes they won't. So that what you measure from high to a low will actually apply from a low to this particular case. 67 bars is approximately double the amount. So we can see that this move down here was in a time to move by the ratio of 2. So that is quite interesting, and that gives us 113. Likewise, if you look at this from a high to this high, it's a 93 bars. Not anywhere else, but over here, if you measure from the low we had in August up to now, we have something. And the second reason why that is also a significant area for time symmetry is that if you measure the entire decline up to January 2015 and you project it forward, then this is where you have a anniversary, as it were, or 12-month period. So we, not 12 months, but just over 12 months, we moved from the top to January low, and it's exactly the same time. That's going to be where this line is here. So that comes in close proximity to 93. So I'm suggesting that if something happened here, like, noticeable high being formed, and we have a strong momentum to the downside, then we have time symmetry between these two move here in time wise to there, equal time, and then this 93 bars reappearing here at 93. So that could be significant. Secondly, if you measure this distance here in time, so that is from the May 2014 up till the high we had here, is approximately 203 bars. So this 203 bars is very similar to what was it, 203 bars. Yeah, see, from here, from a November high up to there is 203 bars, and sorry, 205 bars, my apology, 205 bars, but that's very, very similar to this 203 bars. So whilst we have done this with a hindsight, but we now see that the potential time symmetry between November 2000 up to the low of January, symmetry time wise, is same as from this May 2014 up to this up to this high here, which is July 2015. So it's the 203 bars, just a variation of 2 bars. So I think that is significant and it's acceptable. You have to allow tolerance of a couple of bars on either side. The other important one I've measured is this 145 bars. This 145 bars, which is basically a low from January 2015 going into the high we had here, into the high we had here, the spike high just recently in November. And these 145 bars, I think if you were to measure, okay, my apology, I think I've lost the track on that one. So just ignore that. Just have that in a background in memory. Now, in terms of Fibonacci, if we measure the time between the November 2013 high up to the low of January and project it forward, you will notice that we had this one here, which is like same time, double the time, and 227% and 238%. And what I find interesting with that is that we have a possible, mid June this year, which is really like back end of June. And from what I gather from many of you, that we have a possible halving event coming close to that. So is it likely, we don't know for sure, but is it likely that we may actually just continue grinding down until the halving time? Or are we going to get a strong drop to the downside? I would probably prefer if the prices continue to grind down to that area, because what it will then do is we have a potentially rising trend channel. So we would have gone to the upper end of the trend channel, and now we are falling back toward the lower end of the trend channel with a horizontal area of around about 280. But this might not play out. This might completely fail, and we may actually develop a new strong leg to the downside. So the point I'm making with this overall is that we have several areas where certain time feature reappear again and again. So we've noticed 67, 113 with 205 and 203. We've got here 112, which is similar to the 113 here. See, the 113 from that high to this low is almost the same from measuring from a low to a low, 112 bars. So again, within tolerance of 1 or 2 bars. We've got this here as a 35 bar, and this one is a 19 bar. So basically what we are saying is from this low is 35 bar to this high. And then if you look at from high to a high again, we are coming into an area where it's like 19. So it's almost like doubling. This would have been 38, in fact, so about 3 bars out, but it's very similar. So I can see a lot of similarities like that. So only in that particular way, that time symmetry can be used, and they are not to be used as analysis to stand by itself, because we don't know it even when we have a symmetry, whether that symmetry will be because it will be a low there or a high there. But they are there as a framework, and then we can use that in conjunction with the other forms of analysis. Okay, so we'll move on to which scenario is likely to play out. So out of the 3 that I mentioned here, I am going to discount this one. I put a big cross on there. And the reason why I've done that is because there have been a lot of views from many traders in the Bitcoin community on TradingView, and some analysts, some of them who know how to label Elliott waves, and others who have tried. And the ones who have some knowledge of Elliott wave, many of them have labeled this wave in such a way so that they are concluding that we possibly have this cycle complete here. So ignore the labels that I've got on there, but you will remember and probably know of some analysts who are posting a chart saying that we had a wave 1 down, wave 2 up, wave 3 down, wave 4 up, and wave 5 being truncated. So as far as they're concerned, the entire cycle is now complete, and we should be moving in the new bullish cycle. I don't know whether that's really correct. I really don't think it is correct. I think there's a lot of it's a freelance drawing if that's what they're doing. It doesn't conform to any Elliott wave principles or any Elliott wave guidelines. So I think that is incorrect. However, what is correct is that this cycle completed here. And some of my charts you have seen for quite some time now is suggesting is that we had a swing A down, we had a swing B up, and then this one is a swing C. So we've done ABC correction down to here. So technically we should have really completed the complete retracement, and what we should have started with is a new 5 swing wave to the upside. And particularly so if this was the big degree cycle 3 and we were looking for big degree cycle 4 wave, then we should be going up in a cycle 5 wave. And to commence the cycle 5 wave, ideally we like to see an impulsive 5 wave move to the upside, and we haven't started to do that. And therefore, if we assume that this is completed, then the only possible way we can have the 5 wave moving up is like I've drawn here in some kind of a megaphone pattern. And in a megaphone pattern, we would have a 3 swing move up to wave 1. We'd have a 3 swing move back to wave 2, and we would have a 3 swing move to the upside. And it's not very clear, but you can see this 1, 2, and 3. So it's a 3 swing move to the upside. So we'd have wave 1, wave 2, wave 3, and even for this wave 4, we actually need 3 swing back to the downside. So that will be like swing down 1, 2, and 3. So even this one argues for potentially price to drop somewhere in that region where we have a rising trend line support, and we have possibly a horizontal area where wave 4 could terminate. And then after that, if this one plays out, we would see essentially a 3 swing move to the upside. They could then go up to retest the November 2013 high, or possibly even make a new higher high. If it went up and tagged this line at the top, then it could go up and touch that. But this looks such unusual and very irregular. It very rarely happens in most financial instruments. This kind of expanding ending diagonal very rarely happens. So because of that, I am really not very confident or even considering this as a serious play. The other reason is you can see where we have RSI on this weekly time frame, and many individuals in the past often argued with me and disputed with the idea that we had a divergence here. So that's fine because we had a major top. Then we dropped down, we came here, and when this move was going up, many concluded that that was the complete end of the bear cycle and we are now going to go up. Some big individuals that they have tested this through some, and that this particular low is a final low and it will never be taken out. Whatever they analyze, we've now had this insisted final low, and that we were looking for a final low much lower. But the point I'm now making is, see, we have a low here and we have a lower low here. On RSI, on this weekly, we have a low and we have a lower low. We have no real divergence for the main trend change. And you would ideally like to see that. You'd like to see a divergence between the major pivots on the price and on RSI. So when RSI is now moving up, this is the first time it tagged the 70 line, but it appears to be failing there with this price action here. It's appeared to be failing there. It doesn't mean to say it won't be able to go across. That's not what I'm saying. But I'm saying it's having a hard time moving further up from 70. So what could happen is actually RSI to drop back to cycle down, but that would mean that the price would have to come much lower. And if the price came drop below that or came close to the previous low or make a new lower low, then it is possible that RSI will come down and form a higher low. And then that would actually give us a good that the divergence on RSI plus the fact that we had this first zigzag down, and I think what we got going up is a second zigzag made up of like that going up. Now we should see either a 5-way move down or we should see another zigzag. That's how I'm looking at it, and that's why I'm not sure whether this will play out or it might actually have another possible outcome, which I'll look at in a moment. So because of this, I am this chart. So in theory it's possible, but I think looks very unlikely. So this carries very low score of probability. So going on to the next one is this chart here. Again, with the idea that this low we had back in January 2015 is the final low of the bear market cycle, and that we have now started up. So the reason why we haven't seen a 3-way, or rather, the reason why we haven't seen a 5-way move to the upside, which is what we were expecting if we found, for example, based on this chart, is that if we see that was the final low, we should have had a 5-way move to the upside. We haven't got it. So due to that, I am now considering a possible triangle like this. It's like a big massive triangle. And in the triangle, you expect 3 swings move. But where I am struggling with, even if this one was to play out good, because you have a rising support with this trend line, price could come down to that and basically chop about, get very tightly ranged in there, and then do a breakout. So that is possible in theory. But looking at a wave count, it doesn't appear to be so. And the reason for that is, if that was the case, we'd have to accept that this entire thing here is a 3 swing affair, like that. Okay, so that's a 3 swing to the downside to form a wave A. Now we have a 3 swing to the upside, so that forms a wave B. Now we are looking for 3 swing to the downside, so every swing in here would have to be 3. You can't have any other variation. So every swing in here, so then what if we do drop to here and we hold, then we will again move up in a 3 swing. So you can see that it's going to get very tight and very choppy, like that. And this is, by the way, idealistic sketch. So I'm not saying the price will do exactly that, because in real life, the theory or theoretical anticipation never really tie up with the price exactly. But basically what you should be looking for, if we have this as an ultimate low, and we are looking for this bullish triangle to develop, it's a massive triangle. It's been going on essentially from the November 2013 high. Then potentially we expect price to continue chopping about. Right? If it continues to chop about, then really the safest trade would be is for it to let it do whatever it's doing. I don't know when it's going to be. For example, this one is coming in at August based on my line, but maybe it's possible that we client, but the time isn't, it's not enough time for this triangle to develop. So I think this low, wave E low, will probably sometime after July, sometime in August, maybe early September, if this triangle is to hold. In which case we could go above. So in this one, I'm saying I'm 50-50. I'm not completely ignoring this. And I think this one has a higher probability than the other one that I outlined. But still, I am not convinced. Even if it's 50-50, I basically would not do any if I'm looking for big breakout. And I'm not interested in trading this ever smaller, tighter case, because like here, for example, one day or 1 week, or even one day you might have certainly like a $50-60 move, and then it's done. So if you missed it, you missed nearly more than half the move. And then what do? You're in the midstream where you can't really trade, because sometimes what it does, spends weeks just congesting, and then when you look for a breakdown, by that time you don't have a lot of room. So I would not look at trading this essentially for myself. But many of you will be scalping and doing shorter term time trades, so then it's possible to trade that. But from my perspective, I would say that really this will be out above the top, or we break below the triangle, because that would confirm that we are either in a big bullish move, or breakdown will confirm that we are now in a longer term cycle down. One of the reasons that makes me hesitant in taking this as a reasonable is simply because this triangle is so convoluted. Normally when you see a triangle in wave 4 formation, is you see more symmetrical triangle. So you would expect really to see more like that kind of a triangle. And then based on the Elliott wave, each of these swings we see here, they will be related by approximately 61.8%. So if a swing came down here, made a low, it would go back up. And then if you were to measure that in Fibonacci term, it would be 61.8%. Then if this one drops down, then that one will also be that, how the triangles are normally formed. There will be some both sides because of the volatile instrument, but generally in theory, that's what you would like to see. So when you look at this one, this wave A is so completely grossly deformed in comparison to these other waves. So because of that, I think I'm not dismissing it, but I think it's a less likelihood of it happening. And another reason is, whilst we are in an uptrend, we have a trend line on the MACD, on this 3-day time frame, which now has turned down. We've come to the support line, so ideally it could bounce on there. So that's possible. But on the price wise, in order for this to bounce, it means that the price has to break above the 480 or so zone to the upside. In order for this momentum to really pick up now, the price must drive it up, because the my indicator. So for MACD to really pick up speed, this has to really shoot up. And if we don't get a break above the 480, then what will happen is this MACD has come down, is actually kissed the trend line, and then with the price, MACD will follow back down. That's my worry. And that's the reason why I think this triangle, no matter how much we might argue that it is a realistic a triangle, it is going to fail. And the other thing on this chart that you've also seen on some of the other chart is this. We have a November spike high in 2013. We have this significant spike also in November 2014. And now we have another significant potential November 2015 spike high. So the 3 November in running, we've got spikes from where price proved to be weak from that momentum high. Now I know we haven't really dropped down very far, but this spike high is quite significant when you compare that with this November high and where we have the top here. But the November are almost like anniversary acknowledgement that they are significant tops. So if that was the case, then I think the triangle is likely to fail, and we might actually get a move to the downside. How far? Over time, obviously, we will probably retest this low, maybe make a new low. We won't drop down so fast. So I think this is going to be more like, something like that. We'll come to a chart in a moment, but potentially I'm suggesting that this is likely to fail. Okay, so I'm there, but because of the grotesque wave A, I can't see that this could be a valid triangle, but I will not completely dismiss it. But in order for this triangle to be valid and for me to become excited, I need the price really to break up above the 470, 480 zone with some real strength, strength like we've seen here. Will we see that? I think these indicators telling me that we are going to struggle. So anything could happen, but I think based on the indicators, I think I'm really finding it hard to see how, if you look at the RSI, is back toward the lower end, and the price is at the higher end of this range. So which is likely? Is the price going to break out, or is the price going to drop and the RSI to drop with it? The price, when the RSI is here, ideally price should have been at the lower end. Then there is a possibility we are on a support line, RSI has recycled down, and we could look for a movement to the upside. So my misgiving for this possible big bullish triangle, although it is my suggestion that this is a big triangle, I haven't seen anybody else suggesting that to be a triangle. If this one does play out a triangle, then it would be fitting, because this being a big massive wave 3, then the triangle will complete a wave 4, and the triangle do take place in a wave 4, which is a typical area where in a 5-wave cycle, a wave 4 often can be a triangle. So from those reasons, I am considering this, but because of this grotesque wave A, I am really struggling to see if this can be a triangle, but we won't dismiss it completely. But in order for this triangle really to validate, we either want triangle to play within this range before it breaks out, or we want bullish move to the upside in order for this MACD to turn to the upside. If this triangle plays out and the price drops, then you can see the MACD will drop below the zero line, meaning that MACD is now in a negative territory. And if MACD is in a negative territory, this chop is not going to turn the MACD back into positive. MACD is a very slow, and it takes time for MACD to really catch up. So we could find that MACD drop below, and then maybe do a range before it begins to pick up. But that will go on for quite some time, meaning probably not before August will we see this triangle either validated, or we see a breach below that and the triangle will be dismissed. So this one carries a 50% score, but I'm not really excited. So going on to the next likelihood. Oh, this is another reason. This actually explained my suggestion about the MACD. But one thing I'm really going to ask you to consider, and you can dismiss it if you feel it's not applicable, is this one is on a linear scale. It's not a log scale. You see, all the other charts here are on log scale simply because of the massive change in the price over the period we are looking at. The log scale is better, but this one is on a linear scale. And what I'm trying to show on a linear scale is, you can see in this area, we've had spikes in there and some price interaction. We came back and we had a resistance in that area. We've dropped back below and we've come back into that area and we are struggling. And the MACD is now looking like curling down. It could come down to the baseline in the case of this triangle to play out. And again, this is on a weekly. So on this weekly chart, the MACD could come back down and support, rest on in the zero line when the triangle plays out. And then if the move takes up, then the MACD could come down and go up. So MACD could do this. For that triangle to play out, it must hold the triangle structure, and MACD could do that. It could come down onto zero line and bounce on a zero line before going up. However, when you look at this chart, amount of movement we had on this to the downside, and in comparison, what we've got so far, typically many people would call that possibly a bear cycle, bearish flag. So if this is a bearish flag, then it argues my suggestion that what we had here is a zigzag down, which is basically that ABC to the downside. We have now essentially retraced this one ABC to the upside, and if that is correct, then we are now looking for essentially some kind of an ABC movement back to the downside, or a 5-wave decline to the downside, right? So if this is a flag, but if this is not a flag, then we might get this other idea that they are plotting on, which I can show you on this chart here. So this is a much clearer chart, and again, it marks these important November highs. Similarly, we have a rising trend channel. So even this argues that the price drift down based on the MACD and the RSI we just explained, and for the trend channel to play out, because on the trend channel, we are at the higher end of the trend channel. It would be very hard for the price to hold here and just project from there, I think, simply because of indicators and where we are. You know, in a rising trend channel, you expect to drop back to the lower end and then go up. So if I was asked on my real preferred idea, then I think this would carry a 100% score. And the reason for that is because of few things. We've got time symmetry, which is from a high to a low, 100%. If it plays out like this, then we could have a high of this zigzag. So we would have a zigzag going like this. We've got this zigzag here coming back down and then going back up. Okay, so that would complete the retracement of the entire decline. So then we will be ready for this next leg to the downside. And if you look at this, we are in a rising trend channel. This is the 200 time, that's 100% length here. So this is the 200% length. And as I say, we are at a significant point. We can expect something, and the more likelihood is we would expect the price to drop. If it drops and just continue drifting down to this zone, then it is possibly middle of June or back end of June, early July period. So that goes with the halving that many are talking about. I have no idea how the halving is going to play out, by the way. I don't understand the general suggestion by many that just because it's halving, the price is likely to shoot up. I know historically it did, but in the bear cycle, this will probably be the first time this halving is taking place. So I think no matter how much somebody is so confident on it, chances are that they are likely to, or chances are they cannot be absolutely sure. We would have to wait for price to confirm that. So if the price just continues to drift down, it will allow the MACD to stabilize, and then possibly for the price to pick up. So MACD would pick up, but it would not go as high as this on the upside, okay, nor the RSI. But MACD would definitely not go as high as what we had here. So what we would have in technical terms is that we have a zigzag. We have essentially a higher high if the price got up to this far. After halving, it made another strong run and maybe get into region of 650 to maybe even like 700. And see over here, we have a potential structure resistance. So if the price go into that kind of area, then time-wise, it will be 261%. You see, so whatever time it took here, then the retracement would have taken 161% long length of the time. So time-wise, we would have a time symmetry. It plays within the trend channel. It also acknowledges that possibly the price could continue to be uncertain and weak, and maybe after the halving, it could get pumped up. But that pump up will be possibly dramatic, because if it moves from 270 or 280 area almost back towards 6, it will be equivalent to move from here to there. So from that perspective, it could be quite significant move to the upside, but then run into possible resistance, both of the rising trend channel and the structure resistance. But in doing that, the MACD would go up but fail to keep up with the price and form what I think would be like a lower high, giving you a divergence, a massive divergence between the high we have seen in November 2015 and this high here. And the other point I'm suggesting why this could be really interesting play, if it did play out like this, is we would have a flag of November 13, November 14, November 15, and possibly November 16, because that's approximately where we are in, if it did this. And if it did this, then it's like a perfect trap where all the latecomers will have got caught up in this move, and all the smart money will be looking to leave the Bitcoin, and we would get massive selling pressure at that area. And from Elliott wave perspective, we would have exactly what I'm looking for, is that we had a zigzag down to this here, forming a large wave A. So if I was to put a line on there, and I will change the line on that one now to make it stand out a little bit. Okay, so we could get a larger wave to this area here. We've seen ABC as an intermediate retracement, so larger wave A, larger wave B, and then we would see a larger wave C to the downside. And that could come back to retest the previous low, or maybe drop much further. And it would take a long time. It would not just collapse, because this one, for example, took November to January, is almost like 12, 13 months. This one will probably take much longer. It would, if this happened, I would favor a 5-way move to the downside. It would be much longer, more than 13 months. So if this happened in November, I would be looking at this one probably something more like that. So many would argue that that's not going to be the case, and I understand that. I don't know and have knowledge of the intricacies of the fabrics of Bitcoin and adoption rate and everything else. I'm simply looking at this from technical analysis point of view. So if some feel that, oh, well, in that case, you don't know much and we're going to dismiss it, that's fine with me. I don't mind that, because we're all entitled to our own views. But from my experience, from the fact that I began trading financial instruments back in 1990, and my early technical analysis started from 91, 92 onward, having gone through several different trainings and developing my own skill over a period across a variety of instruments, caught up in bubbles like we had in Bitcoin, and having gone through cycle like 2000 with the stock market collapse and came to 2003, putting all those things together, my experience tells me that Bitcoin will most likely come back and retest this low before, and hopefully it survives in the process of doing that. Hopefully it survives before it has a chance for going up. So this would be my 65 to 70% score if I was to give a score on Bitcoin as to which out of the four scenarios we painted here, out of the four scenarios we painted here, then I am dismissing the triangle. I am also dismissing the expanding leading diagonal leading up to the high. So those two are being dismissed. And then the triangle has 50-50, but this particular one carries, I think, maybe 60-75%, maybe almost 80% score if I was to put them in a ranking order. But if we don't develop that, then my fear is that we might not actually even respect the rising trend channel, and what we were expecting as a zigzag to the upside is actually complete here. Like I showed in the earlier chart, zigzag complete there. This November 15 will prove to be significant, and we would actually now in an early stage of producing a second lot of zigzag to the downside. So mark it out on your chart just as a background, and then let the price help us confirm which of this scenario of the four that we outlined is actually more correct. But this, if we did develop this one, I say I would be from two perspectives. It would satisfy everyone who is expecting the halving to be very positive event. Also, there is a problem which people call forking in the blockchain. I only know of a normal fork, which are quite painful. So I don't understand in financial terms an implication of what these fights about the forking is going to actually end up in. But it's possible that there could be halving event that generates some enthusiasm. But I think a lot of the smart money will exit during this leg up. And the forking, I think, in reality, whatever it is going to be painful. It's not going to be simple. It's not going to be one solution. I see there are a lot of competing groups possibly trying to struggle both to protect their interest and maybe to get a advantage on some others. And you know, if you want a community to come to an agreement, I would say just look at the world. You look at a country and look at the town you live in. Do everybody agree? Look at the country. Do they all agree? You know, we can't even agree among a small group. How can you have people with competing interests across the globe, no matter what Bitcoin is? You know, Bitcoin could be the best thing ever invented, but you can rest assured that not all competing groups will agree. So if each of them is trying to fight into a position of strength and to juggle for advantage, you can rest assured it's not going to end nicely. And therefore, we might see, I'm just hypothesizing this, after the halving, we see a bullish move up, and then possibly lining up with that, what we might also see is some of these fights might become more intense. We might really see explosions of some of these major fallouts. Potentially that could then put a damper on Bitcoin, and the Bitcoin could go into a big decline. You know, financial, just looking at it from technical, I see that as possible. I can't say it will happen, but I see in my mind's eye that those sort of things would line up with the general sentiment you would expect to line up with the Elliott wave analysis and the sentiment analysis. So this one would carry higher score. I would prefer this outcome than this price is simply collapsing here. This collapsing here, I think, is still possible, but it would probably be 50-50 score. So this is my really preferred, out of the four, this is preferred scenario. I would say something else. When we are coming to that, but another point to suggest that we are going to have this kind of a scenario, or even possibly price breaking down, is the divergence between these two assets. They are both denominated in dollar, so we don't have to worry about dollar strength or dollar weakness. And many of you have seen this chart being shared with you by me on the trading view. And what I'm looking for on here is that they are both of similar currency, similar kind of a group of currency, and they seem to more or less pretty much move together. But at some important points, they have more significant and noticeable divergences. For example, over here, we had a significant low on the Litecoin, and then we rallied up. We had a low in Bitstamp in the Bitcoin, and they both rallied up. But then you see the Bitcoin actually made a spike low, but the Litecoin made a spike low much earlier. So you can see from here is that after this, Litecoin continued to run up after the spike, and the Bitcoin actually made its low subsequently. But the more important thing now is this one here. We have a high in Litecoin, then Bitcoin made a new low, and then it ran up and it produced a high much later. But this high and that high now coincide together. But the problem with this is that we have a higher high on the Bitcoin and we have a lower high on the Litecoin. That is a significant divergence in price. I would normally look at Litecoin as more riskier. So people who really want to play high risk game, they would probably pump up the Litecoin first. And that's why maybe over here, we had the Litecoin actually take the run earlier. And the Bitcoin, while still risky, it has a lesser risk comparison to the Litecoin. So if a Litecoin now has made a high and then a lower high, and we have done here the opposite, we have a high and higher high, to me, that is a clear divergence. So now, in order for this to resolve and to see whether we would actually get a breakout, we need a Litecoin to break out above its respective high here, maybe over 4 as a round number. And we want Bitcoin to run up above this 480 area we just noted, in which case then they will both be, after having done this, congested to break out. So we looked at on Bitcoin, is it likely up from here? Now, if we do, then of course, the bull and maybe unlikely expanding ending, which I'm completely ruling out, might actually come back into play. But at the moment, I see that this divergence is a negative divergence, and hence there is likelihood of a price actually dropping back below, maybe back toward that kind of a zone, and this one dropping back here 280 or 300 area somewhere before it has a chance of going up. And another important thing also is this chart. Again, I have shared this chart with many of you, and you will see, I'm not sure what happened here, why I haven't got the price on here. Let me just reload that again. No process is taking a little bit of time. Okay, so now we have a price fully loaded. Just like the divergence we noted in Litecoin and Bitcoin, many of you will disagree with me, and I know many of you do disagree with me, that there is no comparison between stock and Bitcoin, and I would accept that in some way. But the only reason why I think they are related is, if you look at it, is a stock market is an instrument or a financial financial instrument where people express their exuberance and willingness to take risk, or their fear and unwillingness to take risk. So if they are willing to take risk, that means they're expecting to put an asset at their own hard-earned money at risk with a view that they're going to get higher return. So they accept the risk to their capital. But when they are fearful, then they would shy away from it. So they would become fearful, and in such a case, they would sell out with a view of not taking the risk for higher return because they fear now that the loss is more likely. So if you accept that, then I think you can have Bitcoin on exactly the same behavior, but at a steroid. It's magnified by huge amount. So that's why when you look at a run up in Bitcoin, you don't get the same run up on a stock exchange. So I understand that in that comparison they are different. But if you look at it, fact that both instrument of expressing people's enthusiasm to take risk or the fear and shying away from taking risk, then I think they are very related. And you ignore the actual amplitude, because when I look at correlation, I don't look at how much each of them have moved. They have their own amplitude they play out to. But going back from May 2012, uh, I have put vertical lines where every time you have either high or low synchronizing. That's the chart there. Look, starting from there, you have both have low, they run up, make a relative high, they congest. This one came and made a slightly, congested, and came down, made a low. Then again, they both run up, and that one runs up. And it's striking that they are within close proximity of each other. It's not like haphazard kind of a far-fetched kind of a comparison. They do line up within, this is the daily chart, so they sometimes line up within a day and sometimes within a day of each other. So in that case, I would use this as a confirmation kind of analysis or looking for divergences. Okay, so if you accept that, then we run up and made a new high on November 2013, and what stock market in the expression of S&P 500 did was it also run up and it made a high, but then it didn't come down as much with the Bitcoin. It came down a little bit, and even during those cycle when this one is moving up and down, we still have like a stock market coming down, running up, creating a low, going up high. So that high synchronized with the low here, going back high over there. Then the Bitcoin dropped, stock market dropped, and it dropped from here, of course, but still dropped, and they made a low in the close proximity. Then stock market went up, Bitcoin went up, Bitcoin dropped down, stock market essentially gone on a sideways congestion, which is essentially what Bitcoin has done, gone into sideways congestion. Now the stock market is beginning to start making lower highs. So in that scenario, I do not anticipate Bitcoin start making higher high. And then just like the LTC and the BTC chart and divergence we looked at, I think we have a massive divergence here in a sense that we have a high in Bitcoin, and then up to here we have a lower high, essentially like that, a lower high. And all the while we have gone up to here, making a higher high on the stock exchange, and then other stocks are beginning to make lower low, and I think the Bitcoin could well join with it. It might not do it straight away. It might, like we said, even if it should go up there like that and then come down, it allows for a stock market to do something similar, going up and then coming down. I am actually anticipating stock market to retrace back toward that kind of area there, or maybe even a little bit higher. It will form this massive head and shoulder pattern, as you can see. So in that comparison, I feel that the Bitcoin may struggle much beyond this rising trend channel, going up to there, and maybe like in August time, if it comes down and goes up again, then August time it might have actually peaked, and it will then join the stock market to the downside. So these kind of things, if you take it back, then that's the reason why I see this divergence suggesting to me as negative, and I see chances of this one running up and this scenario playing out as a higher probability scenario. So going back to, there was a chart here I was going to share with you. So to conclude the Bitcoin, I have suggested back in January 2015 that actually the November high is a high of a 5-wave cycle. So the 5-wave cycle is like a rising wedge, and you see here is wave 1, wave 2, wave 3, wave 4, and wave 5. And now we would do A, B, and C or kind of a zigzag. And that's another reason why I am suggesting that we may actually have the first zigzag completed for Weiwei. We are making a second zigzag, we probably also completed, and we could be now, meandering before we take a massive momentum. It will probably meander around and then drop off, almost like drop off the cliff. So taking this in conjunction with the chart we just looked at here, some of the things that you can take note of is, beside the November annual anniversary acknowledgement of BTC producing a high, if you look at this high, uh, uh, I am not absolutely sure. Maybe some of you will know what I'm referring to. I'm not absolutely sure, but certainly leading up into November, think of the momentum it had and think of all the positive sentiment the traders had at that time. And smart money will have taken the positive momentum and the positive sentiment, and they will have actually used that to exit. That's just a fact of life. They're trading from a position of strength. Many of the other traders might have actually joined toward the end, whereas the ones with a strong hand, they might have actually been riding all this long and have recognized that we had all sorts of positive news over here, absolutely positive. I can tell you, as a relatively new analyst of Bitcoin, because I didn't start analyzing Bitcoin much beyond or much earlier than August 2013. So last 3-4 months of that run was so positive, and we actually, despite all that positive news, we formed a major top, right? So when should you expect a really positive news? You expect a really positive news and rosy picture, potentially at top, not at bottom. At the bottom, everybody is fearful. Feelings and sentiment should be very negative, almost bordering on distrust. Nobody wants anything to do with it. That's the kind of sentiment you expect at a major bottom. So we had that positive sentiment back in November 2013. Then this here, I think it was the first auctioning of the Marshall Fed, U.S. Marshall, who confiscated some selling of. So that news event created, but really marked the top. Then we fell and we went back up, and I think there was a second Marshall auction, and again it marked the top. So they were the time when there was a lot of excitement. So I'm suggesting, don't be caught up with the fact that you have to be die-hard Bitcoin no matter whatever happens. We had now 3 instances where positive news actually marked the top. So if we have positive news now, like many are suggesting, like the halving and the forking of the blockchain is almost sorted, like many are saying, then and many also are saying that there has been a lot of new money coming in, more adoption amongst retailers, accepting Bitcoin as a payment, and many are suggesting that the Bitcoin is a new digital gold. So taking all of this into effect, some have argued about Metcalfe ever since here, and many of them have now understood that the market don't just go up because of the Metcalfe law in one direction without retracement. And if they haven't, they should read that particular law. Many compare the Bitcoin to email and internet, and it's a new technology came up. It had some setbacks, but then look where we are now. It's universal, and we can't do anything without email and internet at all. So I understand that. I understand wider adoptions. I understand that halving will be positive maybe, and then everybody looking at digital gold. So if all of these things are positive, when are they positive? They're positive at the top. So what should you expect if it's a positive at the top when everything looks so rosy that you can't stop this train? This train now is set on track to travel some distance. If that's the kind of sentiment you get from traders suggesting all of these things to support their view, then when should you expect that? I suggest that you expect these at the very top. If it was right at the bottom, you should be expecting absolutely, negative news. People fearful, loathing the instrument, having nothing to do with it, swearing they'll never touch it, all this kind of thing, right? That's when you expect, and this decline is never going to end. There's no end to this. That's the kind of sentiment you expect to hear. So when people are going through these, I think they have sentiment is very supportive of the fact that this could be a significant top in this still a bear market cycle. And the other point is that if this was a 5-way move up, it's taken some time to actually get there. So if you measure in time wise, if you take that as a complete cycle, as a one unit, then it's possible that the 200% of that would probably come around about back end of 2016, 2017. It might continue even beyond that, maybe back end of 2017. I would not be surprised if it did that. But certainly we are at 161% and it's lining up with the top. So it's lining up with the top means that if this Fibonacci relationship plays out and the sentiment are all positive there and everything else we looked at, I am looking for that being a significant topping area. Not saying it's top today, but I'm saying potentially in the next month or two, this is a significant topping area. So if the Bitcoin goes into this kind of a decline, what opportunities will it present you from trading? Trade will be very choppy. It might not be a clean trade, as never is. Some of the moves happen too quickly and you probably miss to get back. So if you're trading from a swing trade or a longer time frame, potentially you would struggle. If you're trading on a shorter time frame, then you're literally a scalping move or a shorter swing move. Even if you look at it on an hourly or 4-hourly, the charts are not particularly very clean. You get a lot of choppies, a lot of spikes up and down. So unless you catch the absolute top and absolute bottom, you might only be able to catch few dollars, maybe 10, 15, $20, or maybe a little bit more. But it essentially means you have to be glued to a screen. And when price goes nowhere, then for weeks you'll be just sitting there getting absolutely bored. So is that the kind of trading you want? Is that kind of trading likely to make you wealthy, earn a living out of it, as many of you are full-time traders, and if you're only trading Bitcoin, is that feasible from a business point of view? Should you look at something else? Final chart is the chart of an Apple going back into 1980, and I've expanded this here just to show you that Bitcoin can continue declining for much longer. If you look at the Apple chart, the up and coming company, technology, and everything else we can talk about, it did a 5-way move with the upside. You can see here, 5-way move. Then it spent all that time going back down. So from here, if it took off in 1982, it came up to here, 1991, it's almost like 9 years or so. And then from 1991, it continued to decline all the way to 97. So that's like, 6 years. So don't be surprised if this has taken up to here, maybe, from 2010 or so to 2013, it's like 3 years, or if it began earlier, then 4 or 5 years. Don't be surprised if you get this bear market running for at least 3 or 4 years, 2 years for sure. We've already gone beyond that. So, we mustn't get impatient and thinking that, it's already spent all this time. It can't continue much longer. It doesn't happen. Financial instrument do not trade like that. So that would be my suggestion for what it's worth. So I'm suggesting that you consider broadening out. When I first started with the Bitcoin community about a year ago, many of the question Bitcoin, they never looked at anything else. Now, increasingly, I see them looking at oil and looking at gold and looking at some other instruments to trade, because the Bitcoin sometimes does nothing. So, they are trying to branch out. And I think you should. It's a wise thing to do, simply because the one is just stagnant and is not offering opportunity. You have other market to trade. But all market trading, all of them carry a high degree of risk. So essentially, Bitcoin is not ready to give you a method of trading that I am interested in, like trading options. You have futures on them now, but you haven't got options on futures. That will probably take a long time, I suspect. Um, so, trading options on different financial markets, one, you are diversifying, and secondly, it gives you means of trading something without taking huge risk. And the whole idea about these things are that, one, you don't have to spend all your time monitoring the market, almost like some of the Bitcoiners. I hear them when they're chatting, they haven't slept for 2 3 days. Really, is that life? Is that what you want? Maybe as a young guys, you could probably do this for a short while, but you would get burnt out. So the idea would be is to trade something where you're not tied down to a screen. You can live your life and do other things. Particularly if you can't afford to trade full time and you're only trading part of the time and having to work, or you're like an individual with other domestic responsibilities like caring for families and that sort of thing. Then you want a method where you are able to trade this big swing that happen that sometimes lasted for 3 months and 6 months and longer, without taking huge risk, but potentially giving you a relatively high return. And that is why I'm suggesting that branching out into things like stock market, trading individual stocks or indices, commodities, by means of using options on the individual underlying asset is the way to go. As an illustration, I showed this particular chart. You can see it was posted on 23rd was the announcement, and I posted this one 23rd of February, so just last week. And I posted this one, you can see, about a month ago, shared it with colleagues in the stock and index chat, saying that it's got an earning announcement coming out, and this is a potentially bullish move, like a triangle in a wave 4. Remember I said about triangle appearing in wave 4. So this is the wave 4. I was expecting a wave 5 breakout to the upside. So this was not a very long-term trade, a relatively short-term trade, because how long will it go? Wave 5 will probably not be as long as this one. Okay, so 5 would be short. I said that it could easily go to 120 to 130, and at the time the price was around about 100. And then, a month later, price chopped back in there. A month later, what did it do? This is the chart of what it had an announcement, and look, it shot out. So we could have had an option on this one when the price was congesting in here at our leisure. We could have picked up an option, or if you picked up on the lower end, you could have got it for about like 50 cents. But if you didn't and you managed to pick it up at the higher end of this triangle, you would have still got it for about $1. Okay, so $1. The news came out and it was so positive. And remember, this positive news doesn't mean it's a new trend, because people will sell into the strong people will sell into the positive news. It's only the relatively novice who will buy into this news. The news was the earnings announcement was very positive, so it shot up. And now it closed on a Friday at 134.39, right? So if you look at the options, what it would have fetched you if you bought it for about $1. Let me just give you a screenshot. This is a screenshot. You would have considered like an April option. If you picked the March option, the time wasn't enough. So I wouldn't go for I need a bit of time. So I wouldn't go for March, but some people would have taken March, in which case you would have bought it for much less. So if you bought it for April, and you would have bought 130 option, because I said you go to 120, 130 option, you would have bought a call option, and they closed at 7. That means if you put out $1 at risk, then within will happen like that. But this particular trade especially was for potential earnings announcement to come out based on technical supporting a bullish breakout from that congestion period. So you could have bought that for $1, and it turned out to be $7. So maybe if you were early, you would have sat on there for a couple of weeks, maybe even a little bit longer. But now within 3 weeks, you're out. The return of 1 multiplied by 7. So 1 unit of risk give you 7 units of return. Similarly, aware of this chart, for example, which is a LinkedIn. LinkedIn were also expecting the earnings announcement the following day. I shared this one about 23 days ago, again in a stock and index chart in the individual, and I pointed out that this is potentially a 5-way move up. We don't have a price here, but if there was a price there, because it IPO'd here, you see. But if there was a price there with the rest of the market, it would have gone up, and it did complete 5-wave. So my understanding of this is a 5-wave move up to make a high. Now it's come down in wave A, B, and C. So that was my logic, and I suggested that the earnings announcement with the weakness in the market, and Google and Amazon, etc., have already announced and suffered badly after the announcement. So I was not expecting LinkedIn to go up, no matter what the financial positive fundamentals are. I was expecting for this one, not necessarily gap down, but I said it could look. I say it would gap down, expecting a gap down because of this price action here, expecting gap down. And then when they announced the results, within a day, this is what happened. In the same chart, this is what happened. So we were here when we were looking at the trade, and I was expecting it to drop to somewhere about that sort of area. So we would have picked up 130 option, and the price fell straight below that. So again, if you went in, you could have bought this one for about 50 cents or $1 when the price was here. If you did it before the earning announcement, maybe a few days before, you might have picked it up for 50 cents. But if you didn't, it was possible to pick it up for $1. And again, after the news, this is what happened. This is the LinkedIn. So go into my apologies, we do need LinkedIn. So LinkedIn at 130, 140 is the one that we would have picked up, and we were looking for that one to go up to $27.25. So if you picked it up at a $1, you'd be up at a massive amount within almost like 30 times the value. But even if you didn't and you managed to pick up at a little bit higher, you would still be acquiring. You would still be acquiring a decent money on this. I gather somebody saying the microphone was not good. Hopefully it's a bit better. I moved away a little bit maybe, so the microphone should be okay. So again, you could have had a return of 1 unit of risk and possibly 27 unit of return, or if not, and you paid a bit more, you would still have had 15, 16 times the return. So this trade happened quickly, and some of this trade will happen. We are normally looking at a much larger moves in the market. Some of them will probably continue for several months because we won't get such a big gap in our favor so quickly. But these things do happen. So in order to benefit from these, you need to trade options. You can't buy a stock like at 200, for example, or sell a stock of 200 is too expensive. So we should be looking for possibly, trading option where you risk very little. So how can you trade things like this? Obviously, you need to learn about a different market. You need to learn different strategy for trading them. And so I have spoken to many of you who have shown interest in the past. So we are now at the time where we will launch this service. This service we are launching is an option trading group where I am looking for motivated and committed individuals to form a group with me to learn a multidisciplinary approach to analysis. What does it mean? It means using the standard technical analysis that we use, everybody is familiar with. Then we look at a non-standard technical analysis, which are things like ratio charts, looking at divergences, looking at other forms of analysis. Combining all of these things is what I call multidisciplinary approach to analyzing the market, and then continuing to find method of trading them using long-term options with a very relatively small risk. So if everything went wrong on that one particular trade, we assume you lose 100%. The chances are of losing 100% on every trade is really not reasonable, because we would be very selective in the trade that we enter. We would wait for that trade to mature or to come into the area, showing the kind of price action we are looking for, and then we will be effectively monitoring that until we are ready to enter. So sometimes we may have this on watch list for maybe weeks before we are ready for it. So finding a time, entering them at the right time, then I think, if you take an average, we looked at 2 trades here that I posted, turn out to be really good. So even if you get 2 or 3 trades like this out of 10, make good money. So to learn that as a group, I'm offering launching this particular service from 1st of March. It's suitable for beginners as long as they have basic understanding of how to construct a chart. What are the different types of charts you see, like candlesticks and bar charts, and etc. How do you look? What sort of things do you look for major pivots like this here, and supports, trend lines and channels? As long as they're familiar with some of these, then it's going to be useful for them, because they will learn a lot more along with the things that we present whilst we are analyzing the market, looking for potential targets, etc. And it is also suitable for intermediate, because many of them will not be familiar with the style of analysis that I'm employing, and maybe also trading long-term options with a limited risk, and even the advanced traders. We all have different ways of analyzing the market, and many ask me for alternative view. Many say, what is your take on such and such? For example, oil. Many still think oil will go down to 20. They've asked me and said, what is my view on this? So even the advanced traders will probably want a different perspective or another opinion on it. And my analysis, I think, will probably provide that very adequately. So really, I think it's for everybody, what the service that I'm proposing to launch from this 1st of March. But most important element that I would say would differentiate my service, and particularly this type of trading, is it is not scalping. It's not something where you need to be tied to a screen for extended period of time every day. It's really geared to people, first of all, can't spend whole day in front of the PC. They may have a secular job to take care of. They may also have family obligations where they need to shop and clean and cook and things like that. So in all of these respects, we would I'm not sure if the microphone is still playing up, but I will continue. Hopefully it should be there. So anyway, the point I'm making is for people who have other responsibilities and cannot spend a lot of time every day in front of the PC. And likewise, in contrast to many who sell expensive courses, once you've been on a course, which might be for a weekend or a day or a little longer, but after the course, you're by yourself. You either fail or you succeed, and you're doing this by yourself. You haven't got somebody then to go back and sound your ideas, to have them recheck your work or anything like that. So the service I'm launching on a regular monthly basis subscription is affordable, and it is an ongoing. People are able to trade this, learn without having to put extended sort of under pressure, having to learn in such a short space of time. So it's almost compared to apprenticeship, where you learn while you work, as it were. So you have some basic knowledge, you work with somebody experienced in learning the analysis and trading, and you acquire skill to begin to do your own analysis of any market that you're interested in and trade them in a way that would suit your particular style. So this is what I'm proposing, and the service is launched from 1st of March. And if you look at the service, you will see who is it for and how much it costs them, etc. And I've briefly sort of covered that, but I also want to highlight that anybody who joins me during this launch period of month of March means that when I subsequently release services for Forex or indices or metal and commodity, and generally, US stocks and other services will be separate. So when I launch these, they will all be included. So everything you see on the list there up to this number 7 is included. The only thing that won't be included is the coaching, which is not ready, and I won't be launching that for quite some time. And when I do launch, it will be a standalone product on its own. So the benefit of you joining me during launch month is that you will have access to all of that, and the option trading group will be my flagship product. So it's the one where I will be focusing on very extensively. and then launch the others as and when it comes. So to confirm that the price for this service will be $97 for anybody who joins me up till end of February. Then 1st of March, it goes to full subscription of $127. However, for those who join me, first 25 join me from 6 o'clock London time when the actual service will be released. They will be able to have this access for £87 a month. So it's £87 for the first 25, and then up till end of February, it's £97, and then from 1st of March, it will reverse to full price of £127 per month. So I'm hoping now that you will have a good understanding of what the service will offer, and that I will be there for providing this service on a regular basis, where we will have weekly updates, intermediate, inter-week updates, like when midweek, for example, delivered in the form of video chat analysis. And then once a week, I will be holding a live webinar with this private group, where we will consider analyzing the wider markets and addressing any individual questions, and spending time in providing teaching element while we are there online. So thank you all for having spent time with me. It's almost an hour and a half now. Thank you for that, and hope you learned something useful. Even just looking at the prospect for Bitcoin, I hope that I have been very positive and objective as I can be, and not necessarily appear all doom and gloom, but still accepting the fact that it is not likely simply to continue going up like many have been expecting or anticipating. So thank you all for this. I will take any questions. Now, in terms of taking questions, you will have to post your questions in the TradingView chat, or if you have joined me in watching the Hangout live on Google, then you might be able to post your questions in the chat box here. But I suggest if you haven't joined me here live, then you can post the question in TradingView chat, and I will address those questions. Whether they're regarding Bitcoin or regarding the service that I'm launching. So I'll give you a bit of time to. Has the mic resolved? Is it sound okay now? Acceptable? Anybody? Sound is still bad, is it? For what happened, it's a regular mic that I have been using. Can you hear me at all now? I'm really close to the mic now. I'm not sure. I don't want to do anything else now in this moment. But if you have any questions and we're having issue with the sound, then possibly post the question in the chat or email me the questions, and I will try and answer them. So you can post your questions here. But if the sound is so bad, then I will probably have to end the conversation here. How does a decrease in dollar include? It does, but not to the same extent. I think the correlation between dollar and Bitcoin, theoretically, if the dollar is strong, then the Bitcoin would obviously struggle. However, if the dollar weakens, then that would be positive for Bitcoin. But the extent at which they move is such that it is unlikely to be really positive for the Bitcoin. For example, if the dollar only moves by, say, 1% and the Bitcoin moves by 10%, then in essence, and in fact, we know Bitcoin can move more than 10%. So in that case, the dollar really has no very little impact. I think that would be my view. So that's thank you. I hope that sound is bad. Well, I'm sorry. I will have to end the thing here. Then I think it's no point in continuing. I'll have to check my mic and see what's happened with the sound. But I thank you all for your time, and I hope the session has been profitable to you.